If you don't understand this phase of gold's move, then you'll completely miss what's coming next. Hello, everyone, and welcome back to another episode of Gold and Silver Stacking Saturdays, where weekly we share live information that behind the scenes information that'll help you make a more informed and safe decision for yourself and your family in your future when it comes to saving in the form of precious metals, specifically gold and silver. And in today's episode, this is going to be a short episode. What I'm going to be sharing with everybody is, I have the title here, Gold's Explosive Final Phase, the psychology and math behind gold and silver, their big moves. Okay, this is something that a lot of people have asked me over the course of the last 2 years, specifically when I've been sharing a lot of this information, is what drives the markets, and why all of a sudden has there been such a big jump in gold and silver, and where does that stem from? So I'm going to break that down in today's video. And what I'm going to do is the gold and silver bull market and why this move may be far from over. Now, this is something that a title that I had from last week on last week's episode, because, this is something that everything that's been happening, you look back to the market crash back at the end of October, and then here we had another similar instance here in January of this year. But what I wanted to share with everybody is why this is important is because with moving forward, you look at what happened in October and how the markets responded. You look at what happened in January and look at how the markets are already responding so far. So this is very important to know. And so there is a certain psychology and math behind it. So what I'm going to do is I'm going to be sharing a kind of a take a quick look at the gold and silver and how it can take off in 2026. And also, I'm going to touch real quick on the gold silver ratio like I do every week. But then also, I'm going to share a short clip from someone. Now, this is somebody who I have been following for years, and he's been spot on with a lot of stuff. And his name is Jim Rickards. And I'm going to share a clip with him that's going to actually help define and explain why the gold and silver markets respond and react the way they do, and why the gains seem to be exponentially high in most recent times here, and how it's going to impact the gold and silver markets moving forward. And so, like I said, before, this is all the information that I share. This is stuff that on a weekly basis, I'm constantly watching, listening, reading different articles and insight from different people. And I try to pull the best things that are going to make a more informed decision for yourself and your family. So this is why I wanted to share this. This is all for educational purposes. If you do need to seek a financial advisor, for before you make any decisions, by all means do that. But I'm just wanting to share information with you that I feel that will help you make a better decision for yourself. Okay. So what I want to do here is I'm going to go over the gold silver ratio real quick. And when you actually see this breakdown, this is why I do this every week, because from week to week, it does make a difference. When you see what's happened with the gold silver ratio. Okay. And back when we first started our gold and silver stacking series, that was back in June of last year. Gold was at 33.69 and silver was at 36. Boy, wouldn't that be great to have those prices today? That's for sure. But when you see over the course of going over we're going on what, 8 months now. You'll see how the differences goes. Back in June of last year, the gold to silver ratio was 93 to 1, meaning that it takes in this case, 93.54 ounces of silver to equal 1 ounce of gold. And typically, throughout the course of history, the steady range for the gold silver ratio has been in the area of 60 to 1 or 40 to 1, somewhere in that area. Okay. And now, like I said, there's some people that I've listened to that also kind of predict that it'll actually eventually go down to a 7 to 1, which that would be huge for silver. But let's go ahead and take a look at this. So you go back to October of last year when we had that crash at the end of the month. Okay, so, and it wasn't as significant as what it seemed happened here in January, but you see that the markets did respond. So gold was at 33.69, it went up to over 42.55 an ounce, and then it dropped down. Okay, so but then you see here what happened was as things were picking up, you go into January of this year. You started January 1st or January 2nd, gold was at 43.32 and silver was at 72.91. But then before the week of when the markets crashed on January 29th, gold had actually reached a high of 55.94 an ounce, and then silver was at 121.64 an ounce. So you see how much it dropped. That was like a 10%, and like silver was like a 30% drop just in that week. Okay, and everybody was panicking, saying, is this the end of the bull run? Is this something that I screwed up? I bought it when it was too high or whatever. And that's the thing, is with gold and silver, you have to be patient. You have to let the markets do what it's going to do because it's going to have the fluctuations from week to week anyways. But this is to help you understand that, you know, gold and silver is a long-term type savings type thing. If, we're talking physical silver here, that's what I always like to talk about is actually, physical silver that you own, okay? Not the ETFs or anything like that, but the physical silver. But you see what's happened since the end of January. Everything, like, even though it bottomed, everything tanked, so to speak, but you see how gold has slowly picked up. Okay, and this week we're back over 5,000 now for 2 weeks straight. And you see what's happening here with silver. Silver is back on the rise again. So if you look at it from a historical standpoint, between just in the last 6 months between October and January and those two market crashes, so to speak, basically everything, the markets are rebounding. So what I wanted to do is I do want to share how that is important, because like right now the gold to silver ratio is 60 to 1. So last week it was 65.1 ounces to 1. And this week it's already back, down to 60.4 ounces of silver to 1, which is good. Okay, so it's getting more into that 60 to 40 range of the gold silver ratio, which is what it typically has been over the course of history. Okay, so what I want to do here is this video, I'm going to share I'm going to preface this by, this is a 5-6 minute clip that I'm going to share, but Jim Rickards I highly recommend everybody follow him. If you're not following him already, bookmark it, make sure you like look up his channel or look up his videos, because he always shares a lot of great insight. And, he does a nice breakdown on this video of the math and the psychology behind why gold accelerates. And in turn, because silver is directly, it's the, well, poor man's gold. There's a direct correlation between the two. So as gold makes these increases, silver is, gold always goes first, and then silver is soon to follow. Okay, so that's typically what's happened over the course of history. So in this case here, when he's sharing this information about gold and the percentage gains that it makes, it'll actually, as you're listening to it, just think about it as silver as well, because your gains in silver are going to be exponentially higher because of the dollar amount of silver versus gold. Okay, so more people, it's going to be, if you take your money, or however you want to save it, and put it into silver, your gains are going to be exponentially higher than that of gold. Okay, so that's kind of what I want to, keep in mind as he's talking about this, that, this is something that, look at it from a silver perspective as well. Because like I said to somebody back in September of last year, if I had $10,000 to put in gold and silver, what would I do? I would put 9,000 into silver and 1,000 into gold. And, basically with what happened here, with silver, reaching its all-time highs at the 121 there, that would have, the exponential gains I would have had from that would have been nice. Okay, so let's go ahead and take a listen to this. And like I said, this is live, so there might be a little recording here at the beginning, or a little commercial. So let's go ahead and get this going. So I'm going to bring this up to this right here.
This is called the inflation hedge. I call it the everything hedge. When there's uncertainty, more.
Oops, sorry about that.
Inflation or deflation, depression or boom, gold is a very good way to preserve wealth. Actually, gold went up 75% in the Great Depression. The Great Depression, 1929 to 1933, was the longest sustained period of deflation in U.S. history, and yet the price of gold went up 75%. So it again shows you how gold can perform in all kinds of uncertainty. So there's the fundamental case, and that's going to drive gold even higher. But I got to
I get that. I get the strong fundamental central bank buying, flat mind supply, creating a strong structural foundation. I understand that argument. Of course, we've been covering how the excessive weaponization of the dollar following kicking Russia off the SWIFT system has driven central banks around the world to accelerate their accumulation of gold. My question, though, is that doesn't necessarily result in a vertical price acceleration. We would be talking about gold effectively doubling from here. Now, is there a certain catalyst that makes gold double in a year, or is it just a continuation of the same trend?
Well, there are a lot of catalysts, and we talked about some of them, but this is where, like you said, the little bit of math comes in. Now, there's the last 4 years, I've seen enormous strides and insights into what's called behavioral psychology. And, Daniel Kahneman, Amos Tversky, Dan Ariely, and others have been the leaders in this. And what they've shown is that humans, and we're all humans, have biases. They're just built in. You can say they're good or bad, that's fine, but they're there and they've been able to demonstrate them empirically and through experimentation. One of the biases is called anchoring. And anchoring means you get an idea in your head, could be a number or a concept or something, and just you anchor on it and you begin to filter everything you see or hear through that one element, again, what's called the anchor. Now, when it comes to gold, very simple anchor is, gold's been going up, went from 2,000 to $3,000, then 3,000 to $4,000 per ounce. Now it's up to 5,000. And let's just say you have 50 ounces. So when it goes up $1,000, you made $50,000. If it goes up another $1,000, you made another $50,000. So people get anchored on those two things, the $1,000 jump. And again, if you have 50 ounces, you made $50,000. What they don't realize, at least not right away, is that each $1,000 increment is easier than the one before because you're working off a higher base. In other words, it's a smaller percentage gain. So when you go from 2,000 to 3,000, yeah, that's a 50% increase. That's a heavy lift. But when you go from 3,000 to 4,000, that's a 33% increase. It's still a heavy lift, but it's less than the one before. Well, when you go from 9,000 to 10,000, that's only 11%. That's kind of like a good amount the way gold's been going. So my point is, yeah, it's going to take a while to get to 6,000 and get close to 7,000, but it's going to go 8, 9, 10 really quickly because
That's key.
those are much smaller percentage gains. And so that's really how the market, how professional traders think about it. So when you say 5 to 10 doubling, yeah, that's mathematically correct. But what actually happens is it goes 6, 7, 8, and at the end it really gets momentum. It goes to 10 in no time. So saying gold will go to 10,000 is kind of easy. And everyone's out there saying it, but when you explain it the way I just did through the behavioral psychology, it's going to happen. But my point is, it's going to happen much faster than people realize.
I mean, it sounds dramatic when you say 100% increase in a year, but then you keep in mind that it took a year and a half for gold to go from 2,500 to 5,000. So when you put it in that context, it's actually not that dramatic. So you're saying we don't even need any particular catalyst to see this acceleration. What happens though if there is some kind of bigger dramatic event? If there is a treasury market malfunction, a big geopolitical escalation, perhaps even a decision to revalue gold, what would happen in that scenario?
Well, it's a great question. The answer is exactly what I said, but it would happen faster. So you're right. Could there be a catalyst? A war, a policy decision, something of that sort that triggers a more intense interest in gold? The answer is yes, but that just means it'll happen faster. What we haven't seen, and this is very bullish for gold, Michelle, we haven't seen the retail frenzy stage. I lived through the 1970s and 1980s. I remember in 1980, I worked at Citibank, and if I went from the bank to Bloomingdale's to go shopping at lunchtime, I never walked up the street without seeing a chain snatching. There was always somebody grabbing a gold chain off of somebody, minding your own business and running around the corner. It was daily. But my point is, that was the retail frenzy stage. You had people, just popular journalists saying, sell everything and buy gold, which, is usually not good advice. But that was the mentality. We're not at that stage. The buying, as I mentioned, is coming from central banks, it's coming from sovereign wealth funds, large endowments, some of the ETFs, et cetera. But we're not at the stage where people are lined up around the block at a gold dealer to get bars and coins. That's happening a little bit in China. I saw it. It was in Australia in late August. I saw a little bit of that in August at ABC Bullion. Good friends of mine, but they're the largest private gold refiner and seller in Australia, and they were lined up in the central business district there. But that hasn't really taken over. So if you get the kind of catalyst you're talking about, and it's a long list, but kind of war or political indecision or political events are all good candidates, that could flip us into what I call the retail frenzy. And then it would just, everything I said would happen, but it would happen faster.
Well, one of the things that could
Okay.
war games, modeling of the
Okay, let's get off of that. So I wanted to share that because he does an excellent analysis of the percentage gains. Okay, like everybody's like, well, okay, you know, gold from 2000 to 3000, 3000 to 4000. So you look at the same percentage for silver because when silver has its gains, it's going to actually be an exponentially higher because of even when you go back to, the last couple of weeks, with silver, it's actually coming back to getting closer to, where, not, it hasn't broke 100 yet, but when you look at the percentage gains from like say $84 to, $90 an ounce, that percentage gain it's gonna be higher in that short dollar span than like compared to gold. Okay. So it's something that kind of keep that in mind because, like I said, gold and silver, it's not if you're looking at it from a short term, then then don't look into physical gold and silver. I'm looking at it from the perspective of owning physical gold and silver, whether you own it personally yourself and you keep it at your home or in a safe or where have you, or you're storing it in a vault somewhere, or or a company that shares a vault storage thing. Um, that's where you're physically owning the gold or silver yourself. It's not like with an ETF or something where everybody has rights to that gold or silver. Okay. But Jim did a really good job of that. And I'll include a link for that video below and then also share some information on one of the companies that I recommend, that if you want to take a look at, how I'm going about doing things, so you can do that as well too. But I do want to share, uh, one other thing here because I did if you look on my YouTube channel here, this was something that I did back in November. It's Gold and Silver 2025. Watch before you buy because it does a nice breakdown of. I went through the top 5 companies that ChatGPT said were the best places to buy gold and silver online, and I did a comparison between them and also 7K, just to give a breakdown to share with you. Which companies, if you're going to be buying directly in smaller incremental amounts or something where you want to physically have it right away, that'll give you some good insight. So I did want to share that with everybody too. So I'll have a link for that below the video as well. But what I wanted to say, I want to close this out by saying, you know, right now, gold is not gonna you'll probably never see gold below $4,000 ever again. Okay. So, and a lot of people are saying, well, I can't afford it now, but this is where you need to look at it from the standpoint of every little bit that you can save, and whether it's, physical amounts, whether it's grams or, a 10th ounce or what have you, or quarter ounce, do what you can because, with like what the Jim is explaining there, like right now we have all the conflicts in the Middle East with Iran and everything. And if a war does break out or something, that's one of those catalyst things that could actually exponentially drive the markets for gold and silver because then, silver is in silver as well too, because silver is used in a lot of missiles and everything. So it's something that military wise, the demand for silver, that's going to have an impact on the price of silver as well too. So I just wanted to give everybody share that information because it gives a nice overview and the psychology behind these jumps. So, if you're like he's saying, as it goes, as it's getting back up to 5,000, which, we're going, yeah, we're not at the high from at the end of January, but with the exponential jumps that it's had this week versus last week, it's starting to do that, ascent again. So it's like if it does pan out where it actually, um, the response from this market crash is equivalent to the response from the last market crash in October, then we're set for a nice little ride here. But nobody knows exactly what's going to happen, but just kind of do your due diligence and wherever you can, save a little bit here in gold and silver. And like I said, you're going to see your exponential gains are going to be a little higher for your investment if you do it in silver. But that's, at the same time, gold and silver, either one is whatever you can do is going to make a difference and an impact in your family and your future. So take that in mind. So I hope everybody got some good insight from this. I will go ahead and end this now, but I will have the information for that video below this on YouTube when I get it posted. And then also share some other insight as to, what I'm doing personally to save for myself and my family, my future. And then as always, if you're ever in beautiful Galena, Illinois, be sure to stop by. I work smarter for you in silver and gold solutions. So I will also have my email address below here on the YouTube channel. So if you want to reach out to me for like a private presentation, because I do that for businesses and individuals, I do a wealth strategies presentation where I kind of go a little bit more in depth about gold and silver. So if you're ever interested in that, please feel free to reach out, and we'll see everybody again next week. Take care. Bye.